Chair. Part one is an opportunity to talk about the primary purpose and the other purposes of this Act. And the primary purpose about protecting the interests of consumers is a good primary purpose, and then we look at some of the ways, or some of the other purposes, and then some of the ways that we're going to achieve that, which then the rest of the bill goes into more detail. But I do, so I just want to note that some of the other purposes, the confident and informed participation in the markets by consumers, fair, efficient and transparent markets, protecting the interests of consumers under credit contract, consumer leases and buyback transactions of lands, providing remedies for debtors, and that includes things like oppressive contracts and oppressive conduct. And then there's a range of ways those purposes will be achieved, which are outlined in more detail in the next part. But as others have commented, the one of the ways that could be done that's the big gap is the interest rate caps. So I just also want to note some things. And in relation to protecting consumers, the primary purpose, consumers, of course, are people. Consumers are people who operate in a context, and that context at the moment is pretty tough for lots of people. And so part of the reason that we have some of the problems we have with these predatory lenders, the loan sharks, the truck shops, the payday lenders, is because people can't make ends meet, because families are struggling, because there's high unemployment, there's low wages. And so what budget services tell us, and I want to acknowledge them because we haven't really talked about them in any detail, but budget services have been at the forefront of seeking change to the CCCFA because they've seen where it hasn't met the current needs. They've identified problems in the CCCFA which this bill will fix, for example, the hardship provisions, which we'll talk about later. But so they are people who do an amazing job, and I do want to put on record that, you know, I'm sure all of us actually really appreciate the work that our budget services do, because they are where the rubber hits the road, if you like. People go in and, you know, they try and help them when, as one said to me last Friday in Palmerston North, 99% of the people they see are hooked into high interest debt. So that's the starting point. They also say that the levels of debt are higher, that the arrangements are more complex nowadays, and they're seeing a greater percentage of people who are actually in the workforce. So it's not just beneficiaries. So that's the context in which people are consuming, and why the need for consumer credit. Because when even people who maybe are just managing, and then something goes wrong, and if they haven't got savings, if they're not either confident to deal with the banks or they can't get loans from first-tier lenders, what happens is that these predatory lenders are the ones that are advertising, really trying to hook them in. You know, easy credit, no questions asked, etc., don't worry about bad debt. I mean, some of that will be helped by provisions in this bill, and I want to acknowledge that again. There are many good features of this bill. And I too, can I just say while I'm talking about that, the officials that did work with the Select Committee, I mean, I think the Select Committee as a whole worked pretty hard on, you know, some pretty complex areas, some quite detailed work, and we were well supported by Roger and the team of officials from MB. A really good job, and lots of questions we kept asking. Give us information about this. How will it apply to truck shops, etc.? And unfortunately, probably the area that is weakest is the evidence around why interest rate caps won't work. Because actually, I think that, and we'll talk about this more, that a lot of the reasons seem to be the same tired old reasons that have been said by previous ministers, over the last 6 years. But I have to say generally that the work has been absolutely fantastic, and the legislation has certainly been improved by the work of the Select Committee and by the work of officials, and indeed the people who submitted on this bill. So consumers operate in a context, so if we're trying to protect them, we need to be just noting that part of the problem is actually, for some people, the numbers are never going to add up, and therefore Mr. Chair.
Carol Claremont.
And therefore, we need to make sure that people don't exploit that. Yeah. And the responsible lending provisions, which is one of the purposes as outlined in Part 1, to achieve the purposes referred to that I've already gone through, it is going to have a requirement of responsible lenders, both when they provide credit or finance and for the duration of those agreements as well. So that will be right through the process of advertising, people actually getting the loans, and then people managing the loans. So that is one of the provisions or one of the ways that the purposes of this legislation as outlined in Part 1 will be met, as is the disclosure regime around adequate information. Now, we will, in the next part, be looking at the code, but there's been some good work done on looking at how we can make sure that consumers have adequate information. But again, in terms of the context, I've talked about how tough it is to make ends meet. One of the other contextual issues is financial literacy. That is clearly not covered by this legislation, but it is one of the areas that we would all agree needs to be dealt with. And I would say that it's one of those things that we can all go, oh, well, we need to improve financial literacy. Well, I have to say what we need to do is work out exactly how we're going to do that and actually do it. And it's not for want of good material that's out there, for example, developed by the Retirement Commission and others. But we really need to look at how we can lift financial literacy. And it is possible that the responsible lending provisions will assist with that as people do get given information in a more digestible and understandable form. So then there is provisions in this legislation to achieve the purposes around rules, around interest charges, credit fees, default fees. And that's again probably one of the other areas where we have a slight concern was around fees and clarification around unreasonable fees, and we felt that that was watered down a bit, and we will talk about that more when we get to that part as well. The hardship provision is mentioned here, and it is one of the ways to achieve purposes. And just to explain for those listening, at the moment the CCCFA has a provision that enables you to apply for hardship and to try and vary the loan that you might have. The problem is you can only do it before you actually get into arrears, which of course people know, and certainly budget services see every single day, is not when people actually identify they have a problem and try and do something about it. Generally speaking, people are in arrears, and this bill will enable that to match the reality. So that's a good thing. So the rules around security interests are also mentioned in Part 1 in terms of ways that achieving purposes. And again, this is something that budget services right from when the review was started have been identifying that, you know, some terrible situations in this country where people are securing all of their household items, you know, right down to linen and you know, kids' toys and all sorts of other things. And so we've had some discussion on that, and actually in the end, for example, children's toys, I think, weren't included in that list of things that you cannot secure your loan on. But it does mean that there will be some limits around securing loans on basically household items that people need just to be able to live day to day. So that's an important provision as well. Now, in this Part 1, of course, we've also got all our definitions, and I don't intend to go through them, but just noting that one of the definitions in here, and I'm very pleased that this is something that is dealt with the legislation, is the issue of guarantors. And so the responsible lending principles and the code will apply to guarantors. And I have to say, I think that is a very, very good thing, because again, you know, there are a lot of New Zealanders, and particularly I'm thinking of grandparents here often, who feel under some considerable pressure many times, whether it's self-inflicted pressure or pressure that's being put on them by their kids and grandkids, who are struggling and want to get a loan and want somebody to actually be the guarantor for that loan. Now, the problem is that we've all seen probably examples where people have guaranteed loans that actually, in the end, can, in some cases, cost them their house.
Sir William Seo.
Thank you, Mr. Chairman. I'd like to